Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. First and foremost, FANG Friday will not be aired on Christmas Eve, as we will be spending our time with our family. And probably not on New Year's Eve either, as I am still hoping that my wife and I will get away for a short break during Christmas week, the Omicron virus and Mr. Ford allowing, of course. And so second, but more important, on behalf of all of us at Strategic Analysis Corporation and the SVA service, I want to wish all of you a happy Christmas and holiday season. This has been a good year for our FANG Friday weekly review. I trust that all of you have found it of value in your own decision-making with regards to the FANG stocks, and I look forward to seeing you all next year. At this time, I would like to acknowledge the excellent work that my associate Gilbert Enanager has provided me, and by direct implication, you, by his hard work and technical support of this YouTube series over the past 2.5 years. You know, when we dreamed this up way back at the outset, Gilbert was very instrumental in the design, format, and execution of this service. Finally, a reminder that our free introductory webinar is set for January the 6th, and invitations to all those who have registered and been accepted have been sent out as of last week. Reminders will be sent out between now and then to make sure that no one misses the actual time. And now to business at hand. The NASDAQ 100 has been struggling at its resistance breakout point, its HB1 level, or 10 times adjusted book value, which is roughly 16,600 on index, and so far has absolutely failed to advance any further. The S&P 500 has also stalled out during this time, but that should not be too surprising, as the most heavily weighted stocks in the NASDAQ 100, the FANG stocks plus Tesla, are also by far the most heavily weighted stocks in the Standard & Poor's 500. While the historic upside target for the S&P 500 remains unchanged, that is to say, its low super growth price, or 4.5 times adjusted book, I do admit that on sleepless nights, I sometimes wake up at 5 a.m. and wonder whether the NASDAQ 100 has taken over as the master index for market timing purposes in this grand market cycle. Perhaps the only way that we will know is therefore to watch the action of the FANGs and Tesla to see what they are trying to tell us. Since I will not be seeing you for 3 weeks in effect, today I will try to leave some guidelines for taking action concerning the FANG stocks, to which I will add Tesla. Our recent and formal survey of money managers, both very big and very small, suggests that this holiday season should be relatively quiet without any major upheavals. But taking one's eye off the ball is sometimes a sure way to get tagged out. Let us take as few chances as possible given the overall massive valuation risks in evidence. However, before we take a close look at the FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's turn to the FANGs themselves, and we'll start off with the stocks which are sort of in my Phantom FANG portfolio, and the first one is Amazon. Well, there's not much I can say about the stock. It has been riding right along its HB2 price. That's 12 times its book value, a little bit above that. What, of course, makes this not just a straight line, but the fact that that actually the structural prices are growing at a pretty rapid rate. So just standing still is actually not bad for this stock. The second stock in the Phantom FANG portfolio, of course, is Apple. And Apple staged a nice breakout here. You can see there, if you look at the dotted line very closely and carefully, it staged a nice breakout at the HB5 and has probably, that's the HB6, okay, the new HB6, and is heading for what looks to be about the HB7 price, which would be 42 times its book value. And that would be just about the confluence of the current HB6 price. Although, of course, I think that big tick up in the balance sheet is not real once we adjust for the share buybacks, which the company has been undertaking. So remains comfortably there. Now, first problem, Netflix. Netflix came right down to its HB3. That's about 16 times its book value. Did bounce, but just in the last 3 days has kind of slipped below the waves. So now I am very, very cautious of this company going forward. And I'll talk about what we're planning to do about that in a moment. The next stock that is of some interest now is NVIDIA, which, having been up at its HB6 or 33 times book value, had set nicely back and look at with precision to its HB5, and there has rebounded. Now, unfortunately, we didn't exactly have a week or two to get into the stock, but that's one of the reasons why you have to watch the SVA breakpoints very, very carefully. We see this a lot, that they will come down and they will rebound almost immediately. So you've got to be ready to act if you're interested in doing so. Anyway, I could consider this to be now part of the Phantom FANG portfolio, even though I have not actually sort of officially had a moment to put it in there. But we will count that in for the time being. Alphabet, oh gosh, I keep watching this stock so closely. Look at that, It's just kind of, it's really circling its bubble price, that 7.4 times book value. And in doing so, it kind of reminds me of Microsoft, the last time it got to a major breakpoint, not the current time, but the last time. And look at, it sort of circled around there as well for quite a while before it broke out as well. So I'm not sure that Alphabet may be giving us a chance to buy it, but I think we should wait for it. In the meantime, Microsoft is now out of our Phantom FANG portfolio and would not be in again unless it can break out, which I sincerely doubt, given how long it took to break out above its HB1 2.5 years ago when we started the FANG Friday series, and also when it got to its HB2. Facebook, well, here are the three peaks that Facebook had at its bubble price. The stock has not met any of the downside targets, and frankly, look at that. The fair market value has turned down as well, and of course, the stock is in the sights of the regulators, and so I would not be prepared to be in this stock until it actually falls to something that we could consider to be sustainable. Now, I have added Tesla this week, and Tesla now is quite interesting because, like Netflix, it has just very, very recently also broken down. Now, it does not have a confirmed breakdown as of yet, which I'll talk about in a moment, But this is enough to make me quite worried. Tesla has been such an interesting stock. Since it broke out here on the 24th of October, if you take the movement up, and down, the stock has moved over 90 percentage points in that less than 2-month period. Now, if you are a pure market technician, another thing you'd look for is look at the tops. Okay, they are fading tops, and perhaps that may be a foreboding of lower prices ahead. So we're going to be very careful about Tesla. Well, this week there's been some modest attempt at shuffling the deck chairs on the market Titanic. Although I hope this does not mean that the market in general, and the NASDAQ 100 in particular, has struck an iceberg. There had been only 3 FANG stocks. Of the 7 that we follow, 8 now, if I include Tesla, which I think I will for a little while, in what I call my Phantom FANG portfolio. And those 3 were Amazon, Apple, and Netflix. Until this week, these had all remained comfortably on side as far as our structural pricing is concerned. As you saw this week, however, Netflix has elected to test the dark side of the force and looks as if it could be breaking lower. Some time ago, I alerted you to what we call our 3% 5-day rules for selling or buying. Note that this is a rule of thumb, not a hard and fast rule that's in the mathematics of SVA. We normally allow a 3% break up and out over resistance or down and through structural support. And that break has to last for 3 days before we take any selling or buying actions in order to prevent being whipsawed. In other words, this allows a confirmation of a technical signal, buy or sell. Another of the FANGs plus 1 group, if I may say that, Tesla, also looks to be breaking support. So, anyone holding Netflix or Tesla will need to pay particular attention to those stocks over the next few days to see whether we get a sale confirmation on either or both. Please act accordingly if we do. Now, matching the action of the NASDAQ 100 itself, 3 of the FANGs, Alphabet, Microsoft, and NVIDIA, had reached strong SVA technical resistance levels and stalled out and set back. Of the 3, I still like the chances of Alphabet breaking out and having a decent move if the S&P 500 can finish its job this cycle around. But I remain on the sidelines for now. Microsoft is still in the sell column, but NVIDIA has now fallen a full breakpoint from its HB6 to its HB5, or 33 down to 26 times book value, offering a dead-on trading buy opportunity for the very nimble, and so far is holding nicely. I had warned you that a setback down from its HB6 was entirely possible and even quite likely, as that also happened to be the maximum valuation for that stock back in the high-tech market of 2000. I will say it again for those who may be non-believers. The market has a memory, and very often that memory is long and deep. I have my sincere doubts that Microsoft can go any further than its HB3 price, that's 16 times its book value, because it always seems to struggle for a long time at each new major breakpoint. But we'll see. And once again, with Meta or Facebook, it is something that I would definitely label as being in a confirmed downtrend. I would not choose to own any stock that's in the headlights of the regulators, particularly one with such egregious behavior on the record. While at present, as far as our Phantom FANG portfolio is concerned, I am now personally only really comfortable holding Amazon and Apple, although this week I would not argue with NVIDIA right now. Okay? Again, it would not take too much to turn Alphabet into a buy. There are no stock market guarantees that our low super growth price target for the S&P 500 will, or even can, transpire, of course. But that is the way it still appears to be shaping up. I continue to watch to see if Amazon can hold at its HB2 price level, as that would break below its 10-year valuation low and signal worse to come from the stock itself, and also, quite probably, from the market as well. As a final thought, just from looking at just these 8 stocks suggests that there may be more exciting times to come in the immediate future. But what you do with the rest of your portfolio will be more obvious with SVA in your corner. I will see a good number of you on January the 6th and the rest on January the 7th when the FANGs +1 Friday portfolio resumes in the new year. Until then, please stay safe in both your personal health and your financial health. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you all on January the 7th.